You can't lose money in real estate. Probably one of the stupidest statements anybody can say. And this one's said oftentimes. Sellers right now are absolutely stressed. I broke a story about 2 months ago, a video that I went live on, went over 500,000 views, where nobody at the time was talking about the fact that through several states, at the time it was only like 10 or 12 states, were now having their asking prices plummet. And here's the problem. When you start lowering the price, if you're bringing properties in mass in the areas you live at prices well beneath a year ago, when those start to close, you are going to have problems because your closed sales volume is all going down. You can't keep a market up unless your asking prices start higher. And ultimately, these sellers are negotiating a lot harder prices. When the buyer comes to them, they're going to push the numbers even harder. So you're starting the price low, you're negotiating it further. Here's the crazy thing. 2 months ago, I told you it was around 12 or 13 states that were negative. Now it's close to 25 states. And now it's made national headlines because look at what Realtor.com just posted today. Home prices are plummeting in some of the nation's most desirable places to live, especially in these 10 cities. Now they go on to talk about the fact of all of this data pointing the fact that in September, there's been a massive growth in the supply of homes. Really, it's been growing for 11 straight months across the entire country. If you're in Florida, it's far worse. We're seeing our inventory has really been spiking for about 15 straight months, and we have much, much more unsold inventory. Well, if you'll remember, we've obviously had recent history here where everybody, and particularly home sellers, are hoping that this new data right here, the 30-year fixed mortgage rate that was about 7.5% just by the middle of this year, it's absolutely plummeted. You're probably hearing this in the news where it came down to about 6.1%. So interest rates are almost 1% lower than a year ago. But at the same time, even as we have interest rates now bottoming out, where you can go get a government FHA loan for like 5.9% or 5.8, something like that, look at this. Worst September for mortgage applications since 1994. So ultimately, even though we've had this situation where we've been hopeful, there's been a lot of sellers, by the way, that are sitting on the market now for 6 months who have been chirping in the middle of summer, who talk themselves out of doing the right thing with their home price, and they're sitting there in active status, just sitting and getting and aging their listing because they think in their heads, well, the Federal Reserve is going to pivot soon. And people were saying this sell back in July, right? So then all of a sudden the Federal Reserve pivoted. Okay. The interest rates, by the way, for that September rate cut, those came out of the 30-year fix 2 months before the rate cut happened. So understand this. You're saying, Jared, are you saying that ultimately the rates fell and buyers didn't use the rate to buy anything? Absolutely not. They didn't, because ultimately 11 straight months, inventory goes unsold, and now it's hitting epic proportions. Now it's touching the most darling markets in the country. Now look at the top of the pile. Miami, Florida has a negative 12% asking price. That's right. Miami has fallen straight on its face, particularly this year. And I'm going to go into greater detail. If you watch my channel on Sunday at 5 p.m., I'm breaking down Tampa, Miami, and Jacksonville. The 3 largest markets are absolutely cycling because here's what's happening all across the country. You have Miami down negative 12. You have Cincinnati, Ohio, negative 9.5%. San Francisco, California, down negative 9%. Kansas City, negative 8.4%. Austin, Texas, still running negative, and most likely this is negative against last year being negative. So this is negative 6.6. Jacksonville, Florida, negative 6.1. Denver still running a negative 6. Orlando, Florida, running negative 5.6. Tampa, Florida, running negative 5.5, and Nashville, Tennessee, running negative 5.4. If you look at this map, some of the ones I want to point out particularly, look at Nevada. Nevada, when I last did my update, Nevada was up 6%. It was running high. Like it wasn't below the zero line. And it's just fallen off a cliff in the last 2.5 months. I've been hearing people from that marketplace saying, hey, we're seeing inventory just going up and up and up. And that has become the problem. Because here's the thing, folks. 2023 was a different story than what we're going to see in the fall. The fall of 2024 going into 25 is going to be the biggest game changer on price that this market has seen post-COVID. Hands down, and here's why. Everybody in 2023, whenever the interest rates started to climb, we had a 7.5% interest rate for a sustained amount of time. Most of the marketplaces, including Florida, we all saw the inventory climbing, but that was with very little new listing activity being placed in a market. So here's what I'm saying. Unsold inventory was climbing because buyers were out to lunch. But home sellers weren't listing at radically high numbers. They were listing last year at abysmal numbers, which even, for that case, it kind of helped things out. Because ultimately, if you'd have had sellers listing at a reasonable pace, that we've had such diminished interest from buyers that the story was covered for most of the US. But now, particularly in the South, somewhat in the Midwest, and now creeping into the West, Northeast is strong above all. You can see most of this Northeast is orange. It's not even negative. And ultimately, a lot of these changes are happening really from the South taking the brunt. The South as an entire region is nearly down 3% for all of our list prices across like all the states in that region. But we're starting to see the Midwest is right behind us. And then ultimately the West is now going negative. Okay. Northeast is the only one positive. But here's the reality of all this. You now have a lot more seller activity in 24. Sellers are pushing, they're listing, they're not waiting anymore. They waited in 23. They're not waiting in 24. Doesn't mean they're doing the right thing with their home price. Many of them are going to be staying on the market for a long time because they're just not doing what they need to do. Let's take a look at some of these markets that are negative. Okay, you can see Austin at the top. Atlanta did not make the top 10, but Atlanta's been running negatives for 4 or 5 months now, which this is the interesting thing. All these markets, we're seeing them plummet on their asking prices during moving season itself and coming to the end of moving season. So we're seasonally off big numbers. And again, all that just means is that you're having marketplaces, the seller is looking out and saying, there's too much competition. I can't keep a price high. Or maybe they're seeing their neighbors already cutting the prices and not selling. And ultimately what this tells us is before long, you're going to see down price against last year. Miami and 2 or 3 of the other major metros in Orlando are already closing sales negative to last year. That's a huge thing. You got to understand, Miami has been posting 8, 9, 10, 12% positive price month after month, being one of the strongest markets in the entire country. It's fallen on its face, flat on its head in the last few months. Look at this. So a few more. Look, just some, you gotta understand, look at Boston. So Boston's -1, okay? Remember, before they go -4, -5, they have to start somewhere. These are just starting trends. So even if you see some of these larger markets, they may not be record setting. Dallas-Fort Worth, -2.3. Let's see what else we got. Indianapolis, -1.5. Jacksonville, we talked about. Kansas City, we talked about. Las Vegas, Nevada, I just mentioned, -1 for the first time. LA, -1.7. A lot of California markets, man. California is teetering on going negative. Minneapolis, -2.8. I think we just mentioned them. Nashville, we mentioned them. New Orleans, -3. Oklahoma City, -4.6. Orlando, -5.6. Phoenix is -2.3. I'm sure it's been bouncing negative for a minute. Pittsburgh is now -1.5. So look at that. There's some weakness in the Northeast. Portland, Vancouver, Hillsboro, this is Oregon and some of Washington, -3.2. Raleigh, North Carolina, -1.4. Let's mention Richmond, Virginia. You're northern, but you're just at the 0 line. So think about this. It's very, very rare if you look at the history of any market for this indicator, okay? Most sellers are greedy with asking price. How do they start their price? They always shoot for the moon and eventually come down. This is measuring the first shot they take out of the gates. So they're not even shooting for the moon. They're not even shooting over last year at all in a lot of these markets. So you have to understand this, for these markets to go negative, you do not understand. If you look at 8 years worth of data for any city that I'm talking about, they're always over zero. They're never producing an entire index of inventory hitting that's not even asking more than last year. And obviously, you have cities like Miami. Miami was asking 600K median last year, now at 525. Insane. That's going to have an effect. And now they're closing them, like I said earlier, negative. Okay, Seattle negative 3.3. Tampa, we mentioned earlier. What was this one? San Antonio negative 2.8. Sacramento, another Western market, negative 2.3. One more statement about the Florida housing market. This was a fascinating story out of the Wall Street Journal. Talks about somebody who got, I think it's actually someone who works for the Wall Street Journal, but let me show you the headline. Florida housing market buckles, list price sagged to 30-month low, but are still way too high. Inventory piles up. Institutional investors, the Wall Street guys, are turning into net sellers. They're selling more than they're buying, and it's starting to be the news. Now listen, you may now start to tune out. You're from Washington, you're Tennessee, you're Carolinas, you're watching this. This is you 6 or 8 months from now, what you're about to read, okay? You're just starting later than Texas. You're just starting later than Florida, but you're already on the path. The path goes the same direction. Look at this story. It says, so let's use the example of Anthony Holmes, cited by the Wall Street Journal, who bought a house in a suburb of Tampa, Florida. By the way, this is Wolf Street, cool macroeconomic forum that he covers. Who bought a house in the suburb of Tampa, Florida. He paid $550 in Tampa, 2021. Tampa was a hot market. He should have made money on this, right? He put another $50,000 because he bought probably a pile for $550, and he's in it for $600. And then he had to move to Virginia for his job. He puts his home on the market in February. Surprise, expecting easy sale, maybe even a bidding war with some easy profit, but nothing. He then dropped to his original asking price. He dropped his original asking price 5 times to $583,900. Keep in mind, after he sells this house, he's not getting $583,000. He's going to get $550,000. I don't know. He's going to get what he paid before he did repairs. And then his closing costs are going to be, he's probably going to walk with $520,000, something like that. So yeah, the adage, remember the adage, you always make money in real estate, never lose money. He says, I can't unload the thing, Holmes said. In 8 months, I've had 0 offers. No one showed up to the open house. Nobody. Okay? So this is a cautionary tale because you are chasing the market. You're reducing it while it's falling in front of you. If you're in these markets with negative numbers and you're sitting like a duck at the same price and no one's coming to see your house, you are literally costing yourself money. The market is going away from you. By the time you actually come to realize what the market's interest might be willing to pay, you're losing a lot of money in depreciating markets. Look at this. This is the median list price in Florida. You can see that it dropped when Powell cut the rates the first time. This is what sellers are setting out the gates. This leads us, tells us what's coming in the future, because if they're starting them low, they're going to be selling low. We know how this works. June 23, look where it has happened. This is the biggest thing is in the moving season in a lot of these markets around the country this year, April, May, June, July. Usually there's a buyer jump, so buyers are active. That's when they get the tax refunds, they reinvest in real estate. The kids are out of school, they reinvest in real estate. They're trying to make those types of musical chairs, house moves, and all that kind of stuff. A lot of that happens through the spring and the early summer months, even mid late summer, but it starts to tail off. The thing is, a lot of these markets, nothing happened. Like buyers were gone, okay? And in Florida, there's bigger things going on underneath the surface. If you are interested in the Florida marketplace at all, if you are at all considering buying in the market, you own here, you're exposed here now, you're just curious about the story, you have to see the data that I break apart. I go into very specific, very analytical breakdown of Miami, Tampa, and Jacksonville. And it is glaring what is happening, because what just took place through moving season and what we're set up for in the fall it will be the softest fall markets, and the same for these other ones I just cited, particularly the top 10 on that list. But you're starting to see some of these bellwether markets that have been stable for a long time going down, and they're dropping, and prices are now going to see a reckoning because you have no buyers. The buyers are gone. Low rates, they're gone. And now look at this. We got a bounce back because, as luck would have it, our data, look at the rate lately. So the 30-year was on October 1. We started this month 6.2 for a conventional 30-year fix. Look where it is. It shot up 0.5 percentage point. It's like 6.6 now. So there goes all those refinances and people trying to jump into, that have a 7.25 trying to get to 6. If you didn't do that already, you're out of luck. Not to mention the underlying story in how many refinances right now. Do you know that 30% of all mortgage applications are refinances, and more than half of the refinances taking place right now are cashing out their equity? They're cash out refinances. Cash out refinances are coming back in the refinance world. Why is that? Oh, I'm sure they're spending it all at Home Depot on the house. And that's not what it is. Tell me in the comments if you know what it is. Also, let's continue the conversation in the comments. Let me know what you think. What